Bismillahirrahmanirrahim. Assalamu alaikum. Viewers, you are welcome to my YouTube channel, Finance is Specialist. Viewers, in this video, I'll talk about sales tax and value added tax. Viewers, after watching this video fully, you will be able to differentiate between sales tax and value added tax. I have covered two numerical examples which will give you a clear idea that how we can calculate sales tax and a value added tax. This video is going to be very helpful for those who have no or less idea about these types of taxes. Viewers, before starting my discussion on a sales tax, first I would like to explain to you a difference between direct taxes and indirect taxes. Viewers, we have two types, the broad category of taxes, direct and indirect. When we talk about direct taxes, these are the taxes which are applied on an income of an individual or a company. So any tax which is applied on an income is called as a direct tax. And any tax which is applied on a product or on a service, so that tax is called as indirect tax. So therefore, our topic of discussion, sales tax and value added tax, both are types of indirect taxes. But sales tax and value added tax, they have some minor changes in them. Technically, the end result of both types of taxes is same, but their way of application is different. So let's start with sales tax. When we talk about sales tax, a sales tax is levied on retail sales of goods and services and ideally should apply to all final consumption with few exemptions. In other words, we can say that a sales tax is applied on a final product when just before it is going to reach in the hands of the final customer or consumer. When retailer sells products to a end user, customer or a consumer, so he or she will charge tax from the customer, and this tax is on the final product. A sales tax should exempt business to business transactions which when taxed cause tax pyramiding. As I said, that sales tax is applied on a final product, and the sales tax we cannot apply on intermediate steps. Like for example, if any product is in the way of manufacturing, let's say if I am buying parts and then I am making some product out of these parts, so when I will purchase parts, I need not to pay any tax. When I will manufacture a product, I will sell it to the retailer, so I need not to charge tax from anybody. When retailer sells finally that product to the customer, so from customer the retailer will charge the tax on a final product, which is called as a sales tax. Now the tax pyramiding means that the intermediate steps where we are adding value in the product, we are not paying any tax in between, because if we start paying tax in between, so it will cause tax pyramiding, the tax will be more. When we talk about value added tax, or in short it is called as VAT. Value added tax is an indirect tax which is charged at the time of consumption of goods and services and is levied when a value has been added over various stages of production, distribution, right from the purchase of raw materials till the final products are sold to the retail customers. So it is a multi-point tax. This avoids the possibility of tax pyramiding which exists when retail sales taxes are applied to business inputs. Viewers, let's have a look the calculation of value added tax. When we talk about value added tax, we have two types of taxes. One is called as in output tax, and other one is called as input tax. So output tax, it is a tax which is charged on the sale of goods. It is charged on the selling price of the goods. Like if I am the seller and if I am selling something, so the tax which I will charge from a customer, so that will be output tax. When we talk about input tax, so it is the tax paid on the purchase of goods. It is paid at the cost price of the goods. Let's say if I am a producer, so if I am going to purchase raw material, I will have to pay tax. Then I will add value. I will sell my product to the next, which could be the next person, who could be like a wholesaler or a retailer. So when I will sell, so I will charge that tax from the retailer. When retailer would sell the product to the customer, then retailer would charge tax from the customer. And at every step, whoever has paid tax will deduct the difference from receipt and payment, and the difference, if it is positive, they'll have to pay to the government or tax authorities. We'll see in the upcoming example. Calculation example of a value added tax. Let's have a look at the example. Assume that a Max Cool is a branded air cooler manufactured in XYZ country. Assume that the rate of VAT or sales tax is 10%. So if there is no tax, the manufacturer of the Max Cool, let's say, spends $20 in raw material to manufacture, which is then sold to a retailer for a $30, and the retailer then finally sells the product to the end user or a customer for $40. So you can see that manufacturer, it cost the manufacturer $20, and the manufacturer has sold the product to a retailer worth $30, and the retailer has sold the product to the customer at a price of $40. So we are assuming that there is no tax, so the manufacturer and the retailer, they both have earned $10 profit. When we talk about sales tax, so in this example, the input for the manufacturer is $20, and the same would be sold to a retailer at a price of $30, and the final price of this product for the end user, it will be 44. How does it come? The cost price, you can see over here, is $40 plus a tax, sales tax at the rate of 10%. So 10% of 40 is 4. So this tax will be included in the price. So the price, it will become 44. So in this example, the end user or a customer pays the sales tax of $4. The retailer collects the tax from the end user or a customer and pays it to the government. So as you can see that when manufacturer produces the product and it costs the manufacturer, let's say, $20, when manufacturer would sell this product to a retailer at a price of 30, so in between no tax is paid. But when finally when a retailer is selling the product to the customer, so retailer has added $10 of his profit, and the overall cost would become a $40, and if the tax rate is 10%, so 10% is applied on that final price, and the total price will become $44. So this is what an example of a sales tax. Let's have a look the same situation under a VAT situation. VAT tax, with the above example, let's say the manufacturer will pay $22 for raw material. The cost of the product is 20, but the manufacturer has to pay tax. When manufacturer will purchase something, a raw material, so manufacturer will have to pay tax. So the tax rate is 10%. So the $20 which manufacturer will spend on a raw material, manufacturer will pay $2 VAT, at the time of purchasing the raw material. So, and the manufacturer will take $2 value added tax paid as input credit. Now the same would be sold to a retailer by the manufacturer at a price of 33. How does it come? Like the cost price, which is 20 and plus $10 is the value addition. So total price will becomes 30. So 10% of $30, it will come as 3. So the total price of the product which uh, manufacturer would charge from a retailer, it will be 33. So the $33 include $3 of tax. Since the manufacturer has paid $2 already and it has received $3 from the retailer, so the difference comes $1. So this extra $1 will go to the government. So here you can see the manufacturer pays $1 to the government because $3, which is an output tax which a manufacturer has collected from the retailer, and already manufacturer had paid $2 on account of VAT. So 3 is the collection, 2 is the payment, the difference will come 1, then it will go to the government. The next, this example is still continued. The final price charged to the end user or a customer, it will be 44. Like the cost price for the retailer is 30. The retailer has added the value of $10, so total price is 40. So total price is 40 and the 10% of VAT will become $4. Now for the end user the price will be 44. Now you can see that here the retailer will pay $1 to the government because retailer had already paid $3 to manufacturer and retailer has collected $4 from the customer. So the difference between what retailer has paid to the manufacturer and what retailer has received from the customer is 1. So this $1 again it will go to the government. So it is a difference between output and input tax. Though tax is collected at various stages, the end user or a customer bears the full tax of $4. So we have seen in both the examples that sales tax, when applied on a final product, it produces $4 of tax which will go to the government's treasury, and under the VAT example the same $4 amount will go to the government's treasury. Then why the VAT is preferred? Because when we talk about VAT, at every stage of value addition, the tax is charged and deposited in the government's treasury. So it is like instead of waiting till the final product to collect the tax from the customer, if the tax is charged at the intermediate steps, as soon as the value is added, so the tax will be charged and it will come to the government's treasury. So both in VAT or sales tax, the tax amount remains the same and it is borne only by the end consumer or customer, but the preference is given to value added tax or VAT since it is levied at every stage and every participant in the mechanism acts as a tax collector for the government and tax evasion is minimal in it. It is more sophisticated than a sales tax. Let's have a look at the other example. Let's assume that there is a person who extracts stones from the mountains and then the extracted stone from the mountain the person would sell to a stone carver, and the stone carver will carve the stone and then will sell the same stone or the carved final product to a customer. So initially, when a stone seller extracts stone from the mountain, so we'll assume that there will be no tax. He has not to bear any cost. He just needs to go. He needs not to pay any money. He just needs to go to extract a stone from the mountain. Since he did not pay any tax, so I am assuming zero cost and zero tax. The tax rate is, let's say it is 20%. So let's assume that stone seller would sell the stone at a price of $50. Since the tax rate is 20%, or the value added tax rate is 20%, so 20% of 50 is 10. When he would sell a stone to a stone carver, so he will charge 20% VAT from the stone carver. So you can see that total tax which the stone seller has collected is $10, and these $10 will go to the government. Now you can see the stone carver, when it will receive the stone, the cost of that stone for this stone carver is 50. He has already paid $10 of tax, and now he will add some value. He will carve the stone, he'll make some carvings, and then finally he has added a value of almost $15. So the total cost for the stone carver is 60 plus $15. They have added a value. So when they will sell their product at a price of 75, the sales tax, value added tax, the percentage is 20. So 20% of this amount will be 15. So this is when a stone carver, after finalizing the product, when he would sell his or her product to a shop, so that the shop would sell this product to a retail customer, so he will charge 20% tax from a shop. So $15 which a stone carver will receive, so the stone carver will calculate the difference, because the time when he purchased the stone from a stone seller, he had already paid $10 tax. Then as an output tax, the stone carver will collect $15. So 15 will be the output, 10 will be the input. The difference will become $5. So this $5 will go to the government. Similarly, the cost of this product for a shop will be 75. The shop has paid $15 as an input tax, and the shop has added some value, and after adding a value, the shop would sell the same final product to an end user or a customer at a price of 150. So 150, again there is a tax 20%. So 20% of 150 will be 30. So 30 will be the output tax which shop will receive from an end user or a customer. Since the shop has paid $15 as an input tax, so shop will deduct its input tax from the output tax. So the difference of 15, again it will go to the government. So as you can see over here, that different stages of value addition, a tax is applied and charged, and it is deposited with the government. So the first step it was 10, second it was 5, third it's 15. So the total tax will go to the government, it is $30. So similarly, if you look at the final price over here, which is 150, let's assume that if it was a sales tax, so directly we could have applied 30% on this. So 30% of 150 will will give us the same, I mean 20%, sorry, it's not a 30, 20% of this amount will give us the same amount. So as you can see that 20% of this amount will give us 30 directly, but in case of value added tax, since it is charged stepwise, so it is better that every value addition step the government is getting some tax, in bits and pieces. So rather than to wait for a sales tax at the end, it is good that government would get the tax collection. It will collect the tax as soon as the value is added, and it is passed on to the next person or a seller. So both VAT and sale tax brings you the same point, but the advantage of value added tax is that you can get the tax as soon as you add value, while the sale tax you can get only the tax amount at the final product, not in between the steps which are involved. So these are the some advantages that revenue to the government. These are the advantages of value added tax. Revenue to the government under the VAT system will be constant, as it is a consumption based tax. VAT ensures better tax compliance, and tax evasion is reduced to the extent possible due to its catch-up effect. Revenue earned by the government via value-added tax is huge, as it is a low tax rate that is applied to the consumption of goods. The VAT can be monitored and administered in an easier way compared to other prevailing taxes. It is considered a neutral tax as it is levied on all types of business. VAT laws and rules are very transparent, and the tax is collected over various stages in smaller parts. The VAT is levied on the value added on each stage and not on the total price, so there is no cascading effect. There are several taxpayers under the VAT system, as it is levied on various stages, and all the end consumers pay the tax on consumption irrespective of their income. The advantage to the government is that even for the goods which remain in stock, either with the distributor or retailer, the government receives part of the tax. It has some disadvantages also. So let's have a look at the disadvantages of value added tax. The VAT is a little complicated, as the identification of value addition or value added in each stage is not an easy job. Implementation of value added tax across the billing system can be expensive. The VAT can be considered effective only when the end consumers are aware of the tax system, otherwise tax evasion is possible. The manufacturer and distributors must pay tax in advance, as the payment of tax cannot be postponed till the goods are sold to end users. End consumer does not gain or lose anything in the VAT system, as there is no credit for them. Since VAT is a tax on the expense, this tax is regressive in nature, and it affects the poor more than the rich, as they spend more proportion of their income. So viewers, I hope you would have understood the difference between sales tax and the value added tax, and I hope both the examples which I have covered in it would be helpful to you in terms of understanding. So thank you for watching. Do subscribe to Finance Specialist channel by clicking on subscribe button to get the intimation of upcoming useful videos. Stay blessed. Share your thoughts in the comment section. Thank you.